Market Blaster, where we blow apart the stock market and put it back together so that it makes sense for you. I'm Forbes Markets Editor John Dobis. Well, are you better off than you were 4 years ago? Lots of people asking that question as the Democrats convene in Charlotte, North Carolina for their convention. President Barack Obama standing for re-election. His beautiful wife Michelle Obama delivering an electrifying speech to the crowd on Tuesday night. We've also got some other news, though, besides the Obamas. We've got the Draghis. Mario Draghi at the ECB. He's the president of the European Central Bank. He's doing some things we'll talk about in a moment. FedEx had some bad news out, a profit warning. We'll talk about that and what it might mean for the economy also. Big news on Friday, the day after the Democrats get out of Charlotte with their convention, the monthly jobs report for the month of August. Certainly, Barack Obama is hoping for an improvement. Most of the nation is. Maybe Mitt Romney is not cheering as loudly. Wants the economy to recover, just not before November. FedEx, the first decline in profits in 3 years, the company warned, is coming this year. It was a kind of a bit of a surprise. Took the stock down almost 2%. FedEx is a big barometer of economic activity because they carry everything that you're wearing probably and everything that you're using at some point in the value chain. FedEx, UPS, one of those carriers. So a transport stock is when they begin to lag the market, that signifies bad things. And we're also seeing it here in Union Pacific recently. Union Pacific shares down 2.8% on Wednesday, maybe in a little bit of sympathy there with the overall sector and with Federal Express, and taking it back to the 50-day moving average. You can see here, this is the IYT, the Exchange Traded Fund that tracks the transportation stocks. Transportations and industrials should move in tandem in a bull market. Higher highs, the industrial stocks are the things that are the companies that make goods, and the transports are the ones that bring it out to people. So you need to have strength in both of those for a healthy stock market and healthy economy. And you can see that the transport sector has been slipping since late March, really. The spiders, though, the S&P 500 index, the SPY, which tracks it, it's been crawling higher, taking out the old April highs, pulling back a little bit, waiting to see exactly what Draghi does. Mario Draghi playing kind of Super Mario. He has, Bloomberg had a story naming two ECB officials with knowledge of the matter who said that Draghi on Thursday will announce an unlimited bond buying program that would allow him to buy the bonds of countries like Spain and Italy to keep those rates down. But of course, this is all unofficial and based on leaks. We'll know for sure something later this week as Mario steps up to the podium and says what he will do. But you really have had a lot of enthusiasm behind this latest wave of promised improvements down the road from the ECB. But you still need Angela Merkel and her country, Germany, on board. But this would help out the countries of Spain and Italy, get their borrowing costs down, and it would put out one of the fires in this crisis. And of course, you've got the Fed meeting next week. Ben Bernanke has hinted, all but explicitly, saying that he will launch a third round of quantitative easing. So you've got liquidity everywhere coming into the market. Gold, GLD, which tracks it, has been smelling it up from $152 to $164 in just about 1 month's time, climbing above the 200-day moving average. Here you've got the gold miners, GDX. GDX has things like Goldcorp, Newmont, big miners like that, approaching the 200-day moving average, catching up with the metal. The miners and the metal both looking pretty strong. Looking for resource stocks, be careful. BP just got notice that the Department of Justice is going to go after about $13 billion more than the company has already paid. That comes out to about $4 and change per share. Enough for me to make a big change in my decision. I was going to pick this for the daily stock, for our Forbes Dividend Stock Daily. Went with Total instead. 4.7% yield. Interestingly, you get 4.7% in Royal Dutch Shell, Total, which is France's oil company, BP, and Eni, which is from Italy. In any case, BP got socked, down 2.9, almost 3%. What's still doing well? Google. Look at Google, up there at $680, up about $120 in just the last 2.5 months. Of course, you got the Nexus 7 out that runs on the Android operating system. Google's arch rival, Apple, still just smoking it higher. Look at Apple, $671. You've got on September 12th an announcement coming. It's all but kind of assured that it's going to be the iPhone 5. But maybe Tim Cook will also unveil some other kind of a iPad mini, kind of a, one more thing, Steve Jobs style. Apple product release. So you've got the central banks providing liquidity, you've got gold saying it's coming definitely, and stocks, when this quantitative easing and liquidity maneuvers happen, they go up.